Remember, no matter how bad your job is, at least you're not the CEO of Target. Investor Beat starts now. Thanks for watching. I'm Chris Hill, joined in studio by Ron Gross. We'll talk about Target in a minute, but we've got to start with the big macro. That's the jobs numbers. A little bit of a surprise. People were expecting about 200,000 jobs in December. It only came in at 74,000, and yet the unemployment rate drops to 6.7%. First and foremost, were you surprised by the number?
I was surprised because we've had a lot of good economic data points. So this kind of took me by surprise. I'm going to remain optimistic. I think maybe this is just a pause. The fact that the unemployment rate fell is a little bit smoke and mirrors. It's because the labor participation rate is so low. But I think we're going to get back on track.
And yet the labor participation rate, part of that is people retiring. It's
a demographic shift, and there's nothing you can do about that. That's right. Going to happen. But there are also a lot of people that have abandoned looking for work, which is not what you want to see.
Last question on this topic. Janet Yellen, as she steps in to become the head of the Federal Reserve, do these numbers help her? Do they hurt her? Is it a wash?
I think Uncle Ben left the stage right at the right time. The conversation turns to the tapering of the bond purchase program. And people are now wondering, well, is that going to continue? Is it going to continue to be a bigger taper, or do they have to pull back on the reins now? 1 month does not make a trend to me, and I actually think we'll see revisions that probably pull the number up a bit. But, I mean, it's got to be first and foremost on Yellen's mind, without a doubt.
All right, let's move on to Target. Recently, the news came out that as many as 40 million customers may have had their credit and debit card information compromised because of a data breach. Now Target comes out and says, oh, by the way, the number is up to 70 million customers. And it wasn't necessarily just over a 3-week period. It might have been even more than that. How bad is this for Target? The stock really hasn't moved a whole lot in the last month.
That's actually the interesting part. It's obviously there's a trust issue when it comes between Target and their customers, or their guests as they call it. But there's a financial impact as well, and we're seeing it show up in the numbers. They have to take charges. They're offering free credit watch now to customers who have shopped there. I think it's mostly a perception issue. I think this is bound to happen in this kind of a world we're living in nowadays. They're unfortunately the beneficiaries of the negative action. I think a year from now it will be behind them. I think the next 3 to 6 months they're going to be digging themselves out of a hole just a bit.
In terms of the CEO, he's got a little bit of criticism for not being as upfront about this, not being out there in person, really giving the types of interviews and giving the type of reassurances to customers, because some people look at this and say, well, credit watch services aren't really going to help me. What are you going to do to make my experience safe? And they've even gone so far as to lower their guidance because now it actually is starting to hurt their sales.
That's true. It's a credibility and it's a trust issue first and foremost, but it also becomes a financial issue. But if it's going to be anything more than just 1 quarter or 1/2's worth of data, that would be bad. But I think they're going to they're smart guys. They'll take the right steps to bring customers back into the store. I think overall, the industry, credit cards in general, we're going to see a lot of changes coming. I think we'll move to chip technology rather than magnetic stripe technology. It's just inevitable. It's the times we live in. I think Target will put this behind them.
All right, widening our lens a little bit to look at other retailers. We have, on the one hand, we have Sears, which is falling today. They lowered their guidance for the quarter by somewhere in the neighborhood of 50%. But on the flip side, we have Macy's, shares up this week. They really seem to do a good job of managing their store footprint.
I think that's right, and I think that's actually the two companies are perfect examples. Sears is not focusing on their stores. They're focusing on their online, they're focusing on their rewards program, they're not taking care of the look of the stores, the inventory of the stores. Macy's, on the other hand, has done a wonderful job allowing their buyers to buy locally to fit the needs of the customer base in that region. They've been doing a lot of great things. Now we have an announcement that they're cutting 2,500 jobs because they're leaner, not because things are going badly, but because they're leaner and they can do that. Certainly not good for those getting laid off. but fine for the company as a whole because now the cost structure goes down, profits go up, and you're seeing that reflected in the stock today.
All right, as we wrap up the first full week of activity in January, earnings season has officially kicked off. What are you watching next week?
I'm watching Intel. It's a company we own, $1 million portfolio. They've been slow to the mobile game. I think that's quite frankly, and people are focusing on the impact that their decline because of the PC business. But we don't think it's over for them. We think they've got processors that are coming out that will do very well in mobile going forward. But the stock's really cheap right here, so I'm going to be looking forward to hear what they have to say.
All right, for Ron Gross, I'm Chris Hill. Thanks for watching. We'll see you on Monday.